Good morning. Welcome to a new week. It's Market Day Report. All right, as we get things started this morning, we do have some reports coming out this week. We have a crop progress report today. That's out at 4 Eastern, 3 Central, 2 Mountain, 1 Pacific. I think I got everybody covered there. Milk production report rolls out on Wednesday afternoon. Export sales report Thursday morning, with a livestock slaughter report Thursday afternoon. And then on Friday, cattle on feed. So that's what's coming up. But what happened overnight? Let's go to the markets, and we'll look at the corn market. Overnight action, 422 1/4 on the D's. That was down a penny 3/4. 2 1/4 lower on the March at 433. Coming up in just a moment, Brian Hoops with Midwest Market Solutions. We'll look a little deeper into what's maybe moving the markets this week. January beans overnight, 9.90 3/4, down 7 3/4, but the March contract holds that 10 handle. Wheat market, we'll start with Chicago, 3 1/4 higher on the December, 539 3/4. July, 572 1/2, 2 1/2 higher. What about hard red? July contract 2 higher, 571. That is, moisture has been blanketing, according to Jeff, across the southern high plains, hard red winter wheat growing region. Spring wheat, Minneapolis, 5 1/4 higher on the December at 577 1/2. And the cotton market in New York, do you see that? 66.95, and it was up 15. 66 cents for cotton. Crazy. Brian Hoops, President, Midwest Market Solutions. Brian, that's a great example of growing something under the cost of production. But instead of sticking on that, I know that we found some buyers in some export sales overnight, right?
Yeah, that's right. Good morning, Tony. Hope everyone had a great weekend. Looking forward to this week's trading activity. It'll be a full trading week, and then next week we have Thanksgiving that'll kind of interrupt the trading schedule. But yeah, there was some private export sale announcements. 30,000 bean oil sold to India. That was announced this morning. 261,000 soybeans for delivery to Mexico, and 135,000 soybean meal to the Philippines. So no corn, but a little bit of a surprise there that maybe Mexico bought soybeans instead of the corn, but that's what the USDA is reporting this morning. So that probably gives us a little bit of a firming in the early dealings this morning, but you can see the overnight down in the soybeans, down in the corn overnight after trying to trade higher initially. We were stronger on Friday. We opened a little firmer in the overnight, but quickly that rally faded because of good growing conditions in South America, and that's expected to continue to cap our rallies. They've had a hot, dry start to their planting season, but quickly made up ground. They're now at least at the normal pace, if not above pace, in a lot of areas in Brazil and Argentina as far as their planting goes. Conditions have been ideal for seed germination, and the forecast, another 7 to 10 days out, continue to look nearly ideal for crop development. So it looks like they're off to a good growing season, but as we turn into December and January, those are the key months, key time frame for when we have reproductive months there. So key schedules just ahead of us, but right now things are looking good. That's going to keep pressure on corn and soybeans. Wheat does seem to be reacting to maybe the higher U.S. dollar, as well as increased tensions over the weekend. Russia fired some attacks on the Ukraine. We've now said it was okay for Ukraine to use our own missiles against Russia. So it looks like that is increasing that escalation of that war, and that looks to keep wheat maybe somewhat supported here this morning. And then just one final note, Commitment Traders report that was out Friday afternoon, I thought was really bearish to the corn market. It shows that since October 15th, the large trading funds have bought over 180,000 contracts, over 182,000 actually, of corn, and they don't have a lot to show for it. Maybe 10 to 15 cent gains in that time frame, but more of a choppy sideways market. So now that the funds are actually long over 177,000 contracts, commercials have taken the other side. That usually doesn't end up in a bullish scenario, especially as we go into our winter months.
All right, Brian, hang on. We'll take a break. We'll come back, talk livestock futures. Market Day Report continues in a moment. Well, welcome to our Monday morning. Thanks for allowing us to be a part of your Monday morning and your week. Let's see how cattle finished the session on Friday. We'll go to live cattle, and the February contract was 15 higher, 185 and a quarter. The April 47 higher at 187.40. You know, that live cattle contract up 5.3% year to date. That's a ways off of what it was just a month ago, in part because we've lost 2.5% of the value over the last 30 days. What about feeders? Feeders have lost a little bit over the past month, but year to date up nearly 11%. November feeders, Friday, 251.10, up 347. January, what we're really watching now at 247.22, that was up 402. And the hog trade on Friday, the December 79.50, down 60. And the February 82.90 off 87. Let's bring back in Brian Hoops, Midwest Market Solutions. I'm looking at your shirt and I see livestock there, so let's talk cattle for a moment. Cash cattle trade, we had some last week, but we're able to move it up to, I think, 185, weren't we?
Yeah, overall a disappointing week. 185 in the Southern Plains, so that's a couple dollars softer than the previous week. On a dress basis, we were mostly 290 in the north. It's a good $3 to $4 lower than last week's trade. And the outlook for this week isn't real optimistic right now. Steady to lower type of cash trade. It appeared that the Packers tried to lower their kill schedules last week. We only killed about 603,000 head last week, but their margins have not really improved as cutout values did not improve late in the week. So they're looking at negative $70 or so a head on every animal that they kill. They're likely to slow those speeds down a little bit again this week. No doubt next week with the Thanksgiving holiday in an effort to prop up cutout values, propping up their box beef margin, their deficit there. So they're going to do that, I think, in the next couple of weeks and keep our cash markets on the defensive here. We also have a cattle on feed report coming out Friday, and early estimates that I've seen don't look real bullish. Maybe a 1% more on feed numbers, 5 to 6% more placements than a year ago. So I think that's also something that if we see any midweek type rallies, probably will get sold or get hedged, anticipating a little bit of a bearish report on Friday and negative cash trade this week.
Brian, great insight. Thanks for starting your week with us. We'll see Brian Hoops back in here on Wednesday morning with Midwest Market Solutions.